Good morning, good evening, good afternoon, wherever you are in the world. This is John with Tommy's Top Picks here to bring you your weekly market update. It's actually kind of quiet. Before we get into it, though, if you like this content, hit that like button, subscribe if you will. We're about 50% subscribers for the viewers of the market update content. I'd love to get that higher. It doesn't cost you a thing, helps us out. And we're only a few away from our next giveaway at 200 subscribers. That is a comic giveaway for those of you that are Flesh and Blood fans. Sorry, next one will probably be for you, so just hang in there. But yeah, and leave a comment below if there's something I can do better, or if you just like the content, or if you think I suck. I don't care. I'd like to hear what you have to say. The more feedback I get, the better I can become at doing this stuff. So let's jump into our market update. Pretty quiet, like I said. There's a couple things worth noting here. Is we're seeing a big drop in ARK Unlimited boxes. Very odd, if you ask me. I wonder if this ties to that Channel Fireball transaction. There's maybe a bit more. They had a lot locked up in their storage. Maybe it's getting pushed out to the market. I don't know. That's pure speculation. I have 0 points of data on that. Just wondering what's causing this sudden drop. We did have some coolness and then a spike back up. So maybe we could just call this reversion to the mean. Typical market dynamics: 89, 74, 69, 89, 79. That is kind of a midpoint, a little bit high for a midpoint, but a midpoint between the low and the high. We'll take a look at the chart and see what that looks like, but very interesting dynamic there. I will say ARK Unlimited, for some reason, has a lot of volatility over the last month or so, and I'm not entirely sure why, other than the whole market has. This week being the exception, because we have far less volatility this week than usual. Only other thing to note, well, I guess there's two other things to note. We had Mon Unlimited cases. They jumped 11%, and I don't know what's going on here. We had a couple of days, again, could just be reversion to the mean, and this was close. If you recall the highlights mean, it is a 4% essentially. Sorry, the bold, not the highlights. So 4 to 5 instead of 5 plus. So this was up, down, up. Yeah, maybe we're just running out of stock or something. I doubt it, though. This is Monarch Unlimited. There's got to be tons out there. Yeah, I'm not sure. Maybe it's illusionist things. We'll see. We'll have to see what happens in the market. Prism's last stand. Maybe people chasing. You know what it might be? I'll tell you what it is from my perspective. It's just a good time to open Monarch because it has been so cheap compared to when it was hyped and super expensive. That's why I opened my first edition boxes. If you recall, maybe a month or so ago, before Uprising came out, I opened 2 boxes, and I got cold foils in both of them, which was pretty sweet. I think legendaries in both, at least one. I got Husk in one of them. And so, yeah, I mean, it was just fun to open something because it was dirt cheap, and I got them for really cheap, so it was fun to do. I'm not sure how that plays into Unlimited, though, unless Phantasmal Footsteps is really the thing or something of that nature. Leave a comment if you know why Mon is having so much volatility. It's not a huge amount. It's just a small amount, but still. Tales of Aria, still behaving oddly. So 18.5% jump is pretty substantial and of note. This is first edition. So we've had a lot of volatility in this set to begin with, just since it came out. In the print run of Mon made people very suspicious of this, so there's a lot of volatility around that. It's just been one of those boxes that has had a lot of volatility. I mean, if you look, I think we have more 5% moves than non. Yeah. Well, maybe not. I'm not sure. Was I tracking percentage? Yeah, I was. Yeah, I barely moved back here. But after March, it looks like just volatility all the way through, with 1 month off and then more volatility, 2 weeks off and more volatility. So it's been a pretty volatile product the whole time. I'm hoping this settles out at some point. At some point, it would be nice to see a full cycle, because Tales of Aria, I started tracking around Everfest, I think, right? I'll have to double check that. But Tales of Aria basically is the longest cycle that I've been watching closely. And so seeing this settle out into something would be nice. Now, obviously, 2.0 will be a different model, but this will speak to what Everfest will end up being, which Everfest is the row below that. If you look, it has been less volatile this whole time. And that might have to do with the fact that there's all the classes in Everfest versus Tales of Aria, where it's a limited number. Then we got Starvo, which affected that. And then we have Icelander, which also affects it, right? There's cards in need in that set. So that could just be what it is. Nothing special there. The big boxes didn't move much. They're still at their weird lower point. I'd call it weird because it's differentiated from historic norms. This may be where we are in the market. I have a few things to say about that while we get into the charts. And then notable Crew and Tales of Aria first edition cases are both within the 4% mark, almost 5%. So both of these are very close to being, well, this one would be cooling, this would be heating, but you get the idea. They're both in the 4% mark. Crew coming down to $2,000 mark, $100 off, keeps sliding, like that slow slide. And then Tales of Aria first edition cases are hotter than they have been. So that's 2 hot in a row. 319 seems to have been that low point. Looks like if you wanted it for super cheap, you may have missed the bottom, but with the way the volatility is working, I wouldn't be too surprised or worried about it. All right, let's jump into the charts. Okay, WTR Unlimited, just sliding off a little bit at a time. That's how it's been. The box divided by, or the box and then the box divided by 4. You now have yourself a $4 arbitrage opportunity. So open a case, pull out the boxes, charge more for the per box value. It's $4, so that's, you know, $20 over a case saved, but the shipping on each of those is more than that, so you're not getting much out of it. I was thinking about this though. You know how I've always said like, oh, it's not really worth it because of shipping and taxes, etc. It may be worth it for people that run shops, like in-person type shops, because you don't have to pay shipping if you're cracking cases you have in the back and selling them directly at these kind of prices. Now, I don't know that shops actually follow TCG pricing that well. It wouldn't make sense to, so it may not help them, but it's something to think about. I was thinking about it. I'm not sure if that's actually valid, but it was one of those things I was like, huh, maybe this is useful data for shops, but maybe not. Anyways, ARK, we're going to take a look at this. Yeah, look at this crazy. Whoop, that's some craziness. Oops, sorry. That is some craziness there on that box price. Yeah, I don't know what to say about that. That's a bit of a mess. So cases are not reflecting that at all. They're steady state, just kind of sliding over a little bit up, a little bit down here and there. These are 2% markers here, so it's not like this even hit the heat map. But the boxes definitely have. This is nuts. They had 22% up last week, 12%. Yeah, this does feel like a reversion to me. Some sort of volatility hit the market. Extra supply from somewhere. Someone unleashed 1,000 boxes or something, and then that got eaten up because it was so cheap. Because ARK, right? Everyone loves ARK. And now we're kind of getting back into that like slowing reversion to the mean. So it will probably continue up this way and probably flatline around the same price and just continue along its merry way. That would be my guess. None of this is financial advice. This is cardboard. I'm an entertainer. None of this should be taken or construed as financial information for your own purposes. I talk about what the markets do, and then I also say what I would do. I don't tell you what to do. That is not something I'm interested in. So Crew is always a crazy chart, but actually less so. Looks like our volatility might be reducing. Let's see what next week brings us, because right here, I could see this just dropping back down again and having more volatility, or it could slowly like chill out and just kind of focus to a smaller area. This is such a large band. I don't know what to do with it. It's just volatility. It's just a lot of volatility. Our case and our case premium is still well intact, $10 plus, which is a very strong premium actually. Makes sense. Crew is high demand. I think everyone likes Crew. Plus it hits every class. Monarch, like we said, moving up in the world for some unknown reason at the case level. Yeah, there has to be plenty of supply, so I see no reason why that would move up based on natural supply constraints. The only thing I can think of is there's some high demand for it, and the only thing I can think of regarding that is maybe there's some hotness in there for Dromai players, for the new Illusionists. Red Spears of Surreality. I saw that in a deck list recently, so I could see that, and that's in Mon. There's a few, but it's just not that many, so that's why I find this to be unusual. Maybe it's just pure volatility in the markets. It did drop, and so maybe it just got overbought on the other side. So when it dropped, people were like, get it for a discount. And then, it goes back to the mean, and maybe we flatline from here. Maybe it's just one of those situations. Looking at the box price here, similar volatility recently, but now we're pretty stable. I hope to see this kind of stable state go on. I think Mon's always going to be cursed with the history of Mon. Unfortunately, at some point that will get faded out into the data, but in the recent times, since we just got print run number and all that stuff, it's going to be a while. Call it 2 years from now, we might see that fade into the memory of time. For the meantime, expect volatility around Mon just out of the print numbers and people's emotional attachment, disattachment, reaction, etc. to the whole thing. Tales of Aria, so high volatility. This is on the case. Flatline, dip, and rise. So this is, again, the J that I like to see, especially after a couple weeks of solid bottom. Doesn't mean we're going up, especially in this macro market, although I do want to talk about that for a second. The macro market is starting to see some interesting, I guess they call it green shoots is one of the things. You'll probably hear in the news in the next couple weeks, green shoots in the economy, which is slight positive signs, not enough to get your hopes up or excited about. We still have high inflation. There's still good employment, actually. And there's still several factors at play that are macro concerning. But, and this is a big but, and it's funny, Rudy said the same thing recently, so I'm not just copying him. I'm actually seeing it in other financial reports because I have to do for work. It looks like we're starting to see the other side appear. And if you watch my other update, the 2.0 update, I think I covered it in the first one. The idea around inflation, or maybe it was one of these, the idea around, recession is that by the time recession occurs, which is, it takes 6 months to be able to declare it officially. You have to have 2 quarters of down. And there's a particular number, but I don't know it off the top of my head. And once that happens, then that means you've been in a recession for 6 months, and the average recession lasts 11 months, which means we're about, let's call it, we just got the official announcement. Yeah, we're about 4, 5, 6 months away, depending on how long it is, because that's an average, from being out of the recession. But markets, equities, and investables all tend to react faster than the recession removal, right? Because the recession is based on, was it GDP, I think, or growth? I'm not sure. Whichever metric it's based on, it is more of a lagging indicator than things that are more liquid like equities and investable products. So what that means is typically at that 6-month mark, when you finally get it declared, things that are equities, etc., tend to start to recover before you actually are officially out of the recession. It's just historic data. You can look it up. It's averages and such, so it only says so much. But the reality is that right around now is the best time to invest. And I believe, and again, not financial advice, just historically speaking, right around the time a recession gets declared is the best time to put your money into markets for the highest outsized return. And that's, again, just historically. And so I think I even spoke about this one of the previous market updates, or maybe it was the 2.0 update, that, for me personally, I've been putting money in since I've been seeing things start to pick up in various places. And granted, there's still a lot of uncertainty happening right now, so none of this is a guarantee at all. I've gotten more aggressive, is what I want to say, in investing. So I think I said something like plan for 10 months and, budget that out and do that and go, over the 10 months, invest across the thing. That's what I do. And so I did that. And now I'm increasing the volume that I'm putting in each week because it looks like things are starting to move quick. And when they get out of control, they get out of control, and these low times disappear very fast. So I am moving quicker than I was previously to kind of enter the market and get out of a cash position. There's 2 good reasons for that. One, being in cash is really not great right now because it is an inflationary economy. So any dollar gets devalued over the long run. So we talked about 7% inflation a year. on top of last year's 7%, and this is CPI inflation. So things you normally buy, it's you basically cut your dollar down by 14% over 2 years. You don't want to hold cash for 2 years, right? And my cash position was entered about 6 months ago, 3 months to 6 months. It was over time, just like going in, I come out piece by piece. So the point is that I have about 6 months of inflation calculated onto the cash position that I set myself up for. And I don't want to hold that for a whole year, because then it will be the full 7% loss or whatever the next year's inflation number is, right? So I want to get back into equities faster so that I can capture the upside growth. Now, that minor amount, called 3.5, half of the 7% that I took a hit on, is still less than equities dropped, right? So say equities dropped 20% and the inflation was 3% devaluation of my dollar. So I took a 3% hit instead of a 20% hit. And then if I'm jumping back into the market now, you can expect a 7+ gain over the coming year. And if it gets really hyper, and it feels like it is now, this is a gut feeling and nothing like that, then that first year may be more than your average. Averages say 7 to 10% a year is what you're looking for in equities. The past decade or so, especially the last few years, it's been like 10 to 20% easily. So if we end up having a hot year like that, coming out of a recessionary downturn, called a short downturn, then I could see a 20% upside with a 3% loss at the front instead of a 20% down and a 20% up, which is a zero bounce. You see what I'm saying? So it overall nets me more value, which is why being in cash, even though there's inflation, isn't a bad thing if the cash is explicitly set to be an investment and you get into the market at the right time. Now, I will say one of the key things, if you're not really into this stuff, and I am clearly, timing the market is terrible and difficult and not something you do. I am a professional investor, so I do this as a living, and so I'm better at it than your average person because I spend my days looking at this data. It's better to just time in the market than timing the market. That's the classic saying. And the point being is, if you just put money in every month and forget about it, you're way better off than trying to pull your money out, put it in like I'm doing. I'm doing it because I watch this stuff on a day-to-day basis and I can pull that off. Generally speaking, that is not for everyone. But I did want to just point that out, that by pulling it out, accepting the inflation pain of about half a year worth of inflation, devaluation of my dollar, and now putting it back in more aggressively, if I can get it all in and the markets continue to climb and it's only an 11-month recession, which is a lot of ifs. This is why most people shouldn't do this. If I play it right, and I do it all right, then I will stand to gain an additional, called 17% over sitting still. So these are the things that I do and think about and am interested in. Bring this back to cardboard. Even Rudy was saying he's starting to see things tick up, and I think we're going to see that in the tradable space. So we'll talk about that in a second. Sorry, I had to do that little tangent because I thought it was interesting, and the timing is pretty pertinent. It's about right now. So anyways, Tails, Unlimited, still has a nice premium. This seems pretty healthy. We have a lot of volatility here, but I think this feels like a magic release right here, this curve. So we'll see how it plays out, but I like the way this looks. This looks like a normal situation that you would see in Magic. So, and there's no Everfest. All right, let's get through first real quick. Useless data. WTR dropped, went flat. Okay, nothing interesting there. Nice little downslide. 3-1, flat. Like it when it stays flat like that and slowly declines very, very quietly. ARK, nice volatility, dropped to its really low. These may be steals at this point. We continue to see slight declines, especially if we think about things going into an uptrend in the coming months. Might not want to jump on it immediately, but I would not be surprised to see some of these older collectible things start to increase in value. And when they do, it's probably going to happen quickly. Now, that is under the assumption that Fab maintains a collectible status, which Rudy argues it has not. I think he may have been off on that, and I'm not entirely sure he was really paying attention at the time because he also didn't know where the cold foils were in the box he was opening while he said that. No offense to him. He's got a lot going on. He does a lot of games, but the point being is he may have overstated that Fab isn't for collectible people, and we'll talk about that when we go through the best sells. Crew, downward slide, looking tasty. I like Crew. I might actually pick some of this up. Same down here. Nice flat line after a slow decline. Let's see, and it's $1 down, so let it keep going down a couple bucks, you know. Oops, what did I do? I broke the chart. There we go. Mon, slide and flat line. This is probably pretty good. If this stays here and does this like slight decline instead of a more aggressive decline, I think this is all print number, post print number behavior. So I like seeing it flatline, maybe even do a little J uptick over the long term. The perfect thing would be this kind of line and then J uptick. That would be my purchase period. You see what I'm saying? We won't see that until this part is back here, if it's going to happen at all. And that would be a nice indicator. That would actually be really healthy for Monarch First Edition. I'd be surprised if it happened, but it would be really healthy if it did. All right, Tales of Aria, again, still in volatility land. I don't know what to think of this. It's got to be Icelander? I don't know. There's not that many cards. Well, maybe there are. Maybe it's meta I don't understand, like the Muscle Mage. I don't understand it. People love it. I still don't get it. I've tried a few times now, and I still can't figure out how to make it work well. I just think too much like a wizard, I guess. Good, healthy premium on this. Still volatility driven, so you get these little pinches and such, but upward trend. And then let's go to Everfest. See, this is looking like the down. This is almost there. So you see the slow J. Maybe. We'll give it some time, though. Everfest is too new. This will probably have a good bit of this, because if you think about going into the future, a couple sets out, this will be the set to buy if you're coming in new and you want cards for every class. These are more powerful than Crew. Hits every class, including the new stuff. And so was there new stuff since Crew? Maybe not. Oh, Illusionist, yeah. So including Illusionist, yeah. So this may end up being a better model going forward. We'll see. I'm excited to see how this evolves past 7 sets. That's going to be an interesting thing to watch, because we're more filled out than we've ever been. And then here's that nice decline. I don't trust any of this because this is all based on MAP, which is an artificial floor on the market. So you can't really trust this. This is an artificial floor, and it's clearly tried to breach it several times. We'll see after 180 days. I don't want to trust any of this until we get past that artificial floor. This data is not very valid, if you ask me. All right. Sorry, this is dragging on a real long time, but I had some rants there, and I think you guys probably wanted to hear it. So best selling. Oh, you can't see it, but this is set by best selling. Clearly, some very interesting movement here happening. Oh, it's funny. I went out of order the way I usually do it. I do the charts after, typically. My bad. I got distracted. So Flame Furnace is still hot and increasing. This one is kind of where I get a little nervous, because was this the bottom? It's possible. It's very possible. And that's the cold foil. Remember, that's what I'm looking at. From the rainbow foil side, it's just gone up and sideways. From the cold foil, it dropped, but now it's going up, and it seems to be steadily going up. I think when people get bored, this is what I'm speculating. I think when people get bored of the set and we're hyping the next set, come, say, September, October, November timeframe, then these will be easiest to pick up. But then you have things like Crown of Province that's done nothing but go up. Just straight up. And then by that point, what's it going to be? Am I going to bite the bullet and do it? Last time I went all in immediately. I have regrets. It was too aggressive. This time I'm going to go in slow and late. We'll see how it goes. And based on the 2 data points, I'll decide how my strategy acts going forward. Again, not financial advice, and I'm experimenting here, as I clearly just described. So we'll see which one is best, how much of a premium I end up paying on which strategy. But clearly in some of these cases it's going to work out, because cold foil Shuko's is going down. I imagine if Ninja gets shut down because of some deck tech people figure out, then those will drop like a rock. So on average, I think I'll win out. It's just on the individual cards I may not. Probably Drakai, Crown of Province being a generic, probably that. But then these other ones, I think I'll win out. So we'll see how it goes. I did want to point out in the collectible side, these are still healthy. They're still declining, but they're still healthy. And this is the part that I think Rudy kind of misjudged, because he couldn't open any cold foils, and he was, I don't know. I think he just didn't do his research beforehand, and that's fine. He's got a lot going on, and Fab is not his number one thing, so he's doing the proper thing. Oh man, I hope I haven't been cutting off these charts the whole time. I have, haven't I? Shit. Sorry, guys. So this is on a steady decline, healthy though. These collectible cards seem to be holding up better than I would have thought. Historically, the collectible stuff dropped pretty quickly and wasn't that exciting after a period. Yeah, kind of like this. See how this dropped like a rock? But then it recovered. Now it's back down, which is what I speculated. So we'll probably revert to a mean in here. And then I'm hoping with a downward trend as people get bored and more boxes are open. But that does seem to be a question mark, and I might miss out. This might be where I end up feeling the pain in my wallet is on these collectibles. So overall, I would say the collectibles are holding up as they should for 2.0. The usable cards are, more affordable, except for the very, very hottest stuff, Flamescale Furnace and Crown of Providence. Their rainbow foils are still more expensive and not coming down. That's crazy if you ask me, but it does seem to be the case. These other ones are continually on a decline. So clearly the generic stuff holds higher value to the market in general going into Road to National season, Nats, and then Worlds. So you got to think part of its playability. It does mean that these should be really hot heroes, or at least this equipment works for everyone. But this indicates Dromai or Fi is very hot going into the meta, and I think we're seeing that. Road to Nationals, you see Dromais and Fis on the list pretty frequently, so they're in there. They're in the mix for sure. Healthiest meta ever. I'm curious what this will play out as for 2.0 going forward, because I mean, part of the goal was to try to make this more accessible in the rainbow foil format. We'll see. I think there's probably much to be said about time in the market. This will slowly decay. These box prices are staying very low, although I did see this pump up a little bit above $80, so it went above map for a brief period. So we might be seeing some supply constraints. We'll see how that goes. Actually, you can tell in the box, this used to be, I think, 318 or something, so it's kind of pushed up in the case level. So supply constraints are a thing. There's rumor there's another wave coming. Obviously, they did say there was multiple waves for 2.0, so that should be expected at some point. I hope they don't dump it at the 180-day point. Maybe they want to dump it early. Maybe that's what they'll do. And this floor will maintain, which will help maintain the value across the board. If it doesn't, and they do it more towards when it comes off of the map pricing requirement, there is a second tier map I just found out about, 35% down, which I'm not sure what that price would be off of the MSRP, but whatever that is would be the next floor we'll see. And then after whatever that period is, when that drops off, which seems like a long time because they still have stuff like, I think, Tails on that. But when that drops off, then we'll be on a natural market cycle, and we'll have a better idea of what the market feels the supply is. Hopefully they cut extra waves to avoid any sort of catastrophic price drops or downward pressure, because that just hurts shops, right? If I have to sell it at this price and it's not moving, then that means I'm holding on to capital and inventory and it's not doing anything good, right? So it's locked up, and that's bad for shops. So we don't want that to happen in the long run, because you'll have no shops to play at. But we'll see how it goes. I think so far it's on the right track, generally speaking. There's a few things I would correct, but this is way better than it's been in the past. So we'll keep up with it on 2.0 updates, and then more rambles will come along. So if you like the content, go ahead and hit the subscribe button or thumbs up or leave a comment. And I hope you guys have a good one. Are cracking packs and playing games. I got my second draft tonight. Looking forward to that with the shop in the group. And I hope you all have a good day, and I'll see you next time.